Rahul, so inventory turn will always be different for different quarters and different months. For every festive, you have to stock up the inventory, and after festive, the sale is different. The inventory numbers are different. When you see the balance sheet, those inventory are on a particular balance sheet date. But internally within the organization, we keep on working on the inventory turn on the different months, different periods, and it's a continuous activity. To come specific to your numbers, the inventory turns are around 2 for the company in the gold jewelry and around 1.3 in the diamond jewelry, which is correct numbers as of now. However, it's a continuous activity in terms of the improvement. So we are very conscious about the inventory holding. You must have seen in our balance sheet that the inventory movements are there. We are constantly working towards it and improving the number on the inventory turn.
Okay. Thank you.
Thank you. Our next question is from the line of Sonali Rao from SR Financial Services. Please go ahead.
Hello, am I audible?
Yes, Ms. Rao, you are audible. Could you please switch to your handset if you're on speakerphone?
Just a minute.
Thank you.
Okay, am I audible now?
Yes, please. Go ahead.
Okay, first of all, congratulations for the result and thanks for allowing me to ask questions. I have 3 questions which I'll shoot one by one. So the first question is, what should be the ideal step to be taken by the management to improve the gross margins relatively? And as an internal assessment, what's the ideal gross profit margin TVZ should have for a sustainable earning growth?
Okay. So, Sonali, there is no ideal scenario in terms of the gross margin percentage. It again depends on gross margin is a combination of what discount you run during different festive, how much inventory you are able to sell during the full price and during the discounted period. The quarter on quarter, the gross margin number differs because of the different festive periods. You see, during the quarter 1 of financial year 23, we have achieved a gross margin of 10.4%, whereas the same quarter it was 12% last year. Last year was even a lockdown period. Mm-hmm. So the gross margin numbers are different. The Q1 FY23, there were different campaigns which we have run during the FY23. We had a Zaveri, we had a Tribhovandas festival, and because of those discounts we run, the gross margin has come down. So it's actually the input margin, however, we are maintaining the numbers when we achieve, the output margin may differ from a quarter to quarter. So there cannot be an idealistic scenario that we will land up at a so-and-so gross margin, though we have internal targets. Obviously, we do not meet those targets in terms of achieving the margin, but it would be very difficult to pinpoint a particular gross margin to be idealistic in a business.
Okay. So there's a follow-up question to that. The question would be seen in last 2 years, we have rationalized certain costs thanks to COVID. However, we have seen some costs coming back to the system again. So how an investor should see a margin trajectory?
Cost, you are talking about operating cost.
Okay. Hello?
So I'm asking, you are talking about the operating cost?
Yes, operating cost.
Yeah. So look, if you compare with financial year 2021 or 21-22, which is really a period due to the COVID, there was a lot of business disruptions which has happened. Those numbers may not be exactly comparable with the current financial year. So if we see the numbers in line with the pre-COVID period, we are actually catching up in terms of the revenue, in terms of the EBITDA margin, in terms of the cost as well, with the same period of pre-COVID period. So it is more or less in the same line. You know, cost will always vary with the revenue percentage. So actually, the variable cost will go direct in line with the revenue number. So absolute number, when you see, you will see a huge jump into the absolute number. But when you put in the perspective with the revenue percentage, the cost may remain in the same range bound.
Okay. And I have one more question. On growth front, Would like to understand what has been the growth volume year-on-year and quarter-on-quarter in terms of grammage of gold.
Yeah, I think we have achieved a very handsome. If you see from a grammage perspective, the quarter one we have done the sales of 600 kg approx in the gold vis-a-vis same period. If you see last year, it was around 50% of that volume.
Okay.
Yeah, a similar situation is in the diamond sales as well. So the since 21-22 and 22-23 may not be exactly comparable numbers because of the COVID situation. Even if you compare with the previous quarter, there has been a huge jump of 20% in the number achievement.
Okay. Okay. Thank you.
Thanks.
Thank you very much. Ladies and gentlemen, before we take the next question, we'd like to remind participants that you may enter star 1 to ask a question. Our next question is from the line of Neha Sharma from VK Capital. Please go ahead.
Hello, am I audible?
Yes, you are, Ms. Sharma.
Yeah. Sir, can you please elaborate on which quarter of the year the company would be having the maximum inventories, and which quarter can we see the liquidations or the sales of build-up of the inventory?
So, Neha, the answer is very straight and simple. Any festive, the bigger festive, you can count 15 days before the inventory build-up starts.
Okay.
You know, and during the festive, the inventory goes to the peak and the sale happens. And after the festive, inventory gets neutralized. So, really, if you see the curve, the inventory and sales goes in hand in terms of going up, and then sales is also going up during those particular periods of festive during the year, and then comes in normalizes. So we really try to maintain the ratio of the stock turns and all, so that the absolute value number we should not increase the inventory number.
Okay. And so one more question. How are we targeting the growth? One in marketing campaign as mentioned in your presentation, but also what I see is what is the inventory mechanism for the same? I mean, what are we chasing as an organization? Margins or top line, market share, ROE, what it could be great if you could share some roadmap to understand in detail.
Neha, I think there are too many questions in your one question. I'll answer one by one.
Yeah.
So, I think one part is you are talking about the inventory. Obviously, as I answered, that the inventory goes hand in hand with the festive. We try to maintain the inventory turn. So if we are able to achieve the inventory turn, we are actually maximizing the gross margin. You know, gross margin, as I said, it again depends on the festive, how the festive goes, what offers are rolled out to achieve a particular number. We are very conscious about internally, there are targets fixed, and we are very conscious about hitting a particular sales number and then hitting a particular gross margin number. And we have not missed any of these numbers in this Q1 internally. Coming back to the expenses are also again same. It remains in the same line of the targets whatever we have fixed, and we are very hopeful of achieving at least 20% sales growth in terms of the number what we have achieved quarter on quarter. I am talking about the comparable numbers of the pre-COVID level. So that is what we are saving currently.
Okay, and so one last one, if you permit. In regards to your opening of stores, we have seen addition and deletion in last 5 years. So now what's the roadmap? What are your targets?
So we are definitely looking forward to grow the business in the newer markets. We are exploring to open new stores in the next 3 quarters.
Okay.
So that work is going on currently.
Okay. Thank you, sir. That's it from my side.
Thank you. Ladies and gentlemen, you may enter *1 to ask a question. Our next question is from the line of Sagar Shah from Shah Investments. Please go ahead.
Yeah, good evening. Sir, I would like to understand what component of revenues from bullion sales, if any, and whether it would be a recurring one, if any.
Yeah, hi Sagar. The bullion sales is a very negligible part of our business. In terms of percentage, if I put, it will be hardly 2 to 3%.
Okay. Thank you.
Thank you very much. Ladies and gentlemen, you may enter *1 to ask a question now. Anyone who wishes to ask a question may enter * followed by 1. Our next question is from the line of Barkha. Please go ahead.
Hello.
Yes, ma'am. Please proceed.
So my question is, I see the personal expenses in 21. It was 54 crores. FY22 it was 63 crores. Now if we analyze Q1, it's 70 crores already. My whole understanding is when we are not growing on profit front, why is personal expenses increasing?
I think you're right in terms of the numbers. Current year, FY23, you have just multiplied the numbers with the 4 quarters. You're right, we are at 17.5 crores in the Q1 in the personnel cost. But if you compare immediately with the financial year 2021 and 21-22, it may not be a direct comparable number. However, if you see as a percentile to the revenue, you will see the movement is in line. So personnel cost is again catching up at a pre-COVID level because for a particular number we have to have the similar strength in terms of the manpower, and that's the reason of bringing this number. If you see 18-19 number also, our manpower cost used to be around 72 crore only.
Okay. Thank you.
Thank you. Ladies and gentlemen, you may enter * followed by 1 to ask a question. As there are no further questions at this time, I now hand the floor over to Ms. Sandhya Sutoria for closing comments.
Thank you everyone for joining us today for this call. In case you have any further queries, you can get back to us or our coordinates provided in the investor presentation. Thank you so much. Good day.
Thank you very much, members of the management team. Ladies and gentlemen, on behalf of TVZ, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.